Hi there, everyone, and welcome back. This summer is absolutely ripping along. I can hardly believe it's already August. Labor Day is in just a couple weeks, and kids are headed back to school any day now. As is always the case, August has been a little sleepy, but this market is charged for an incredible fall. But before we get into the numbers, a quick intro. I'm Chris Halstead, Managing Director of Sales from Brown Harris Stevens, Connecticut, and each month I give you a quick recap on what's going on in the Lower Fairfield County real estate market. In this report, we'll cover all the happenings from July. And even though the summer has been a little sleepy, you will not be disappointed to hear the market is still moving along swiftly. All right, let's talk some shop and dig into the numbers. To kick things off, let's start with inventory. If you remember, the last 2 months, May and June, we saw a year-over-year increase in inventory. Each month saw a bump of approximately 7%, marking just the second and third month respectively we've seen an increase since 2020. And I was hopeful this was the beginning of a trend that would start to chip away at the major deficit we found ourselves in when compared to pre-COVID levels. Well, unfortunately, in the month of July, we swung negative again. Active house inventory was down 3% when compared to last year. And while 3% isn't a huge drop, it certainly doesn't help in making up any of the pre-COVID deficit we need to dig ourselves out of. Lower Fairfield County is now down 79% when compared to July of 2019, and according to Realtor.com, statewide, Connecticut continues to have the largest inventory deficit out of any state in the US when compared to 2019. This is certainly not a title we want. On a more positive note, and fortunately though, house closings in the month of July were up year over year. We saw a jump of 2% from each of the last 2 years, coming in at 444 transactions. Now, interestingly, since we're tracking inventory against 2019, we might as well track closings too. Those 444 closings are down about 20% when compared to the same month in 2019. Certainly a sizable deficit, but nowhere near what we're experiencing in inventory. Now, with strangled inventory and persistent strong demand, it is no surprise that prices are up. Our median sale price rose 5% year over year to $1,490,000, which marks a record for the month. With the median way up, it's no surprise that the high end of the market is whipping along too. In July, there were 55 house closings over $4 million. That's right, 55. That number is up from just 32 a year ago. And as for pending sales, there were 33 houses under contract north of $5 million, also up considerably from the just 24 last year. However, looking at all pending sales, we're down about 6% year over year at the end of July. Now, days on market are also being impacted by our limited inventory. In July, houses sold for an average of 104.6% of their asking price. The 29th straight month we've seen that number buoyed over 100%, buoyed by 59% of those sales closing over their asking prices. And median days on market for those sales were just 14. That number is consistent with last year, but it's just half of what we saw in 2021 and 2022 at the height of the COVID market. I do want to point out something interesting I've seen though. Even with sales going over ask and those transactions happening in a record short window, pricing is still so important. You cannot overprice your house. Buyers are too savvy to overpay. So you need to be well educated on what the market will bear and counterintuitively price below that number. Overpriced listings are getting no action. As I usually do about this time in the show, it's time for me to make my plug again. I don't remember ever seeing such a strong seller's market. Inventory is historically low, so you will have little competition, and prices are at a record high. The high end of the market is as strong as it's ever been, and sales are happening in record time, well above the asking price. If there was ever a perfect storm, this is it. please reach out to one of our fabulous agents to learn more. I think you will be surprised by what your home is actually worth. All right, to bring it in, let's briefly touch on mortgages. The 30-year fixed rate mortgage ended July at 6.72%. This is nearly identical to where numbers were last year at the same time and falls squarely into the 6.6 to 7.0 range we've seen for the entirety of the year. I think it's fair to say that this is the new norm for the time being. There is some talk of Fed rate cuts in the fall, but I don't know how much this will actually impact the mortgage market. And as I mentioned last month, remember that 6.72% is historically low when looking at the 50-year average for mortgages. So even though it seems high in comparison to a couple years ago, it is in fact considered low. Okay, that does it for July. As always, thanks for tuning in to learn more. I love sharing all of this with you. Remember that if you have any questions between episodes, when episodes air, I'm here to help, as are all of my wonderful agents. Be in touch with questions and inquiries, and in the meantime, to dig deeper on what was discussed, please visit our Mastery of Connecticut webpage where you will find Brian Cleary's town by town reports. Thanks everyone, and so long.